These are two stocks you should buy in 2026 if you want to make so much money. So I'm very bullish on these two stocks in particular because I have done deep research about them and I'm going to be sharing with you all, right? And I hope you learned something from it today. If you're seeing me for the first time, my name is Achi. I'm an award-winning serial entrepreneur, a wealth educator, and I'll teach you how to understand money, invest wisely, and gain financial freedom. This is officially my first YouTube video on this space where I'll be officially talking about money, okay? How we're going to build wealth in 2026. Now, please don't forget to hit the subscribe button and turn on post notification, leave a comment, share this video because it's about to be a banger. Before we get into it, here's a quick disclaimer. This is not a financial advice. Kindly do your own due diligence by researching on each of these companies before you invest in them and make sure it is based on your own discretion before you can purchase any of these stocks. You cannot enjoy this privilege alone, okay? So hit the subscribe button so I can be gingered to post more videos like this that you're going to benefit from. If I told you there's a Nigerian stock that went from zero revenue to billions in sales, cut losses by over 90%, printed a strong profit in their Q3, that's the third quarter, enjoyed tax-free profits, and is still trading below its fair value, would you pay attention? FTN Cocoa is a turnaround stock and timing matters. One of the biggest mistakes investors make is waiting for perfect numbers. But markets don't reward perfection. They reward direction of change. FTN Cocoa is not being bought because it's already perfect. It's being bought because the trajectory has clearly changed. This is what early stage turnarounds look like and before the crowd arrives. These are few things to note. Revenue has fully returned and this is a structural reset. Let's start with the most important metric in any business, which is their revenue. In their Q3 2025, they made a revenue of about 377.27 million naira. Meanwhile, their Q3 results in 2024, they had zero revenue. Can you imagine? How was that even possible? Meaning they did not make any money at all. They did not lose any money at all. But yet, they were able to make a revenue of over 377 million a year later. This alone tells a powerful story, but it gets better. Well, their 9 months 2025 revenue was about 2.19 billion naira, while their 9 months 2024 revenue was about 637.5 million naira. Their year-on-year growth basically gives about 243% growth in just 1 year. This is not incremental growth. This is not cost-cutting optics. This is fully operational restarts. When a company moves from zero revenue to hundreds of millions per quarter, that's not noise, that's structural resets. So it basically means production has resumed, sales channels are active, demands exist, and execution is happening. And markets reprice companies when operations return, not when profits are already mature. Another thing to note is that losses have collapsed and this is inflection point. Now let's talk about what really changed investors' perception. Well, losses collapsed dramatically, and I say their 9 months losses after tax was about 693.3 million. Meanwhile, that's for 2025, and their 2024 loss after tax was about 12.58 billion, meaning they went from a negative of minus 12.58 billion to minus 693.3 million naira. That's roughly 94% reduction in losses. But then the real signal came in Q3. Their Q3 2025 profit after tax was about 444.38 million naira, while their previous year, which is Q3 2024, was about 2 billion naira loss. I mean, minus 2 billion naira loss. So they went from minus 2 billion naira loss to a positive, that's a profit of 444.38 million. So it basically means in just 1 quarter, FTN Cocoa erased about 39% of their entire 6 months loss. This is not normal. That kind of acceleration is what we call earning inflection points. The exact phase where smart money starts positioning before full year profitability becomes obvious. Next, the EPS trend confirms the turnaround. Earnings per share tells what is happening at the shareholders level. So here's what the number is saying. Q3 EPS improved from minus 0.54 to minus 0.11. That's about 80% improvement. And then in their 9 months EPS, it improved from minus 3.23 to minus 0.18, which is about 94% improvement. This is critical. Loss per share is collapsing rapidly, and here's something most investors miss. Stocks usually reprice before EPS becomes positive, not after. So by the time EPS is comfortably positive, the biggest percentage gains are often already gone. Also, I want us to take note of the tax advantage, which is a silent profit multiplier. So now this is where FTN Cocoa gets very interesting. Because of Nigerian agricultural incentives, FTN Cocoa pays no corporate income tax. That means once profitability stabilizes, every naira of operating profit flows directly to shareholders. Now, no tax drag, no margin leakage. This gives FTN Cocoa a structural advantage over many consumer and industrial companies that lose a significant portion of earnings to taxation. Another thing to note is valuation. The market is still behind the story. So let's talk valuation. The current price is about 7.3 naira and the estimated fair value is about 9.5 naira, which is about 31% upside just to fair value alone. But here is the key point. If Q4 result confirms earnings stability and the market applies a higher multiple, valuation expansion can be much larger. So in strong turnaround cycles, stocks do not just move to fair value, they overshoot. That's how you get 100% to 400% growth in recovery stocks like this. Next, price action confirms smart money in positioning. Fundamental tells you what to buy, and price action with technical analysis tells you when money is entering. And FTN Cocoa price action is very telling. It's currently trading well above long-term historical levels. The strong buying pressure across daily, weekly, and monthly time frames. Momentum is strong but orderly. No panic spike, no blow off top behavior. So basically, this looks like accumulation, not speculation. So multiple frame strengths usually signal early institutional and smart money positioning. Macro tailwind is supporting this story. It basically means FTN Cocoa is not recovering in isolation. Macro conditions are very supportive. Global cocoa prices remain elevated. Nigeria is actively pushing on oil exports. Agricultural tax exemptions protect margins. Now, FX-linked export earnings improve revenue quality. This tailwind increased profitability that this turnaround is sustained and not temporary. Now, let's be honest. I'm going to tell you the risk part of this. FTN Cocoa is still loss-making on a 9-month basis. Volatility will remain high and this is not a defensive stock. So this is a turnaround plus momentum play. But here's the reality. Market typically rewards the stock before profitability becomes undeniable, not after. So in summary, this is why FTN Cocoa is a good buy. Let's summarize everything I've said so far. Their revenue has returned strongly. The losses have collapsed by 90%. EPS trend is improving sharply. Q3 profits erased 39% of 6 months losses. Stock is trading below its fair value. The price action confirms buyers' confidence and macro conditions are supportive. So it basically means after they increase their Q4 result, it can lead to a very big turnaround in this stock. So remember, FTN Cocoa is no longer a distressed agricultural stock. It is a recovering, earning inflecting business that the market is still in the process of repricing. For investors willing to accept volatility in exchange for asymmetric upside, FTN Cocoa represents a very good buy at the stage of this cycle. This is exactly the kind of stock that moves hardest when profitability becomes obvious and undeniable. So if you found this very helpful, like this video, subscribe, and let me know in the comment section if you are watching out for FTN Cocoa this year. This second stock we're about to talk about is one very cheap stock that is currently very strong. What if I told you there's a Nigerian stock that is selling for just over 4 naira and yet the earning is 1 naira per share already? This is not hype. This is not speculation. Today, let's break down Mutual Benefit Assurance. This is one of the most undervalued but profitable insurance stocks on the Nigerian Stock Exchange. Mutual Benefit Assurance currently trades at 4 naira 10 kobo and I classify it as moderate risk, earnings-backed value stock. This means it is profitable, earnings are growing, and valuation is cheap. Just look at the numbers because numbers don't lie. Firstly, revenue is growing consistently. In Q3 2025, Mutual Benefits recorded 19.66 billion, up from 15.85 billion last year. That is 24% year-on-year growth. For the first 9 months of 2025, revenue came in at 60.86 billion compared to 44.34 billion in 2024, and that is a 37% increase. This growth is basically coming from higher insurance premiums, better policy intakes, and improving confidence in Nigerian insurance sector. This is not one-off income, this is operational growth. Number 2, profits are scaling faster than revenue. Now, here's where it gets interesting. Profit before tax in Q3 2025 was about 2.99 billion versus Q3 2024 that was about 1.46 billion. That is up by 105%. Now, their 9 months profit before tax was about 15.28 billion naira versus the 2024 one, which was about 6 billion. That is up by 155%. This basically tells us 3 things. 1, margins are expanding. Underwriting discipline is improving. Investment income is working in their favor. Now, this is quality growth, not cosmetic profits. Number 3, EPS confirms shareholders' value. Earnings per share is the money that actually belongs to shareholders, and this confirms the story. The Q3 2025 EPS was about 13 kobo versus 11 kobo from 2024. That is about 18%. Now, the 9 months EPS, that is about 69 kobo versus the 23 kobo from 2024. That is up by over 200%. Now, the trailing 12 months is about 1 naira already. Let that sink in. At 4.10 naira price, mutual benefit is already earning 1 naira per share. Number 4, valuation. This is where the opportunity is. Now, at today's price, the stock is trading at roughly 4 times earnings. That means if you are paying for just 4 years of current profits, it is far below market average and far below what profitable insurance company typically trade at. This creates a strong valuation floor. Downside is limited compared to the upside. So number 5, what is the price action saying? The market is already responding quietly. The stock trades above long-term historical levels. Buyers dominate sellers across daily, weekly, and monthly charts. And the momentum is strong but not speculative. So basically, this looks like steady accumulation and not hype. So now here is why the macro environment favors insurance stocks. The current Nigerian macro environment actually helps insurance companies. The higher interest rates boost investment income on premiums. The economic stabilization improves claims predictability. Insurance awareness and adoption are rising, and lower inflation volatility improves underwriting accuracy. These factors support earnings sustainably. So now let's check and let's be balanced. This is not a risk-free stock. Insurance sectors can be slow movers, regulatory changes matter, and liquidity is lower than the tier 1 bank and far below what profitable insurance company typically trade at. This creates a strong valuation floor. Downside is limited compared to the upside. So number 5, what is the price action saying? The market is already responding quietly. The stock trades above long-term historical levels. Buyers dominate sellers across daily, weekly, and monthly charts. And the momentum is strong but not speculative. So basically, this looks like steady accumulation and not hype. So now here is why the macro environment favors insurance stocks. The current Nigerian macro environment actually helps insurance companies. The higher interest rates boost investment income on premiums. The economic stabilization improves claims predictability. Insurance awareness and adoption are rising, and lower inflation volatility improves underwriting accuracy. These factors support earnings sustainably. So now let's check and let's be balanced. This is not a risk-free stock. Insurance sectors can be slow movers, regulatory changes matter, and liquidity is lower than the tier 1 bank. But here is the key. The valuation already compensates for the risk. So now this is how investors view mutual benefit assurance. This is a value plus earning compounder. It is best suited for patient investors, not short-term traders. The upside comes from continued earning growth and possibly PE rating as strong results persist. So here's the price outlook. You want to accumulate mutual benefit assurance at about 3.7 to about 4.2 naira. Well, the fair value is about 8x earnings, that's around 8 naira. Now, the potential upside is about 80 to 100% over time if re-rating occurs. So here's my final verdict. This stock has strong revenue growth, profits growing faster than sales, solid EPS, extremely cheap valuation, and supportive macro backdrop. So mutual benefit is not cheap because it's weak. It's cheap despite being strong. So for investors looking for earnings-backed upside with valuation protection, this is high quality buy. Finally, if you want deeper breakdowns like this and structured investment guidance, join my inner circle and subscribe for more Nigerian stock insights. In my inner circle, I share stock updates where you can buy stocks at an early price and make money faster than other people that are investing blindly. I also teach you how to invest in the stock market, mutual funds, and other fixed incomes that are available, where it is government regulated and safe for you to invest in. So if you're interested in joining my inner circle, kindly use the link in the description button. And please don't forget to hit the subscribe button and share this video to someone else that it's going to benefit. See you in my next video comments. Ciao.